Hey everyone, John Henry here, slingshotfutures.com, and welcome to the daily market outlook for the futures markets on our Big Six. It's going to be the Bund, Gold, Bonds, Crude Oil, NASDAQ, and the S&P 500 for trading tomorrow, and that is going to be for the 21st. Now, today being the 20th, welcome to spring. Finally, right? Maybe the snow can melt a little bit. I know it's beautiful by me right now. I can actually see the sun, and hey, perks too. I can also see the grass, so we're headed in the right direction. Now, before we jump into the charts and all the fun stuff that happened today, make sure to swing on over to slingshotfutures.com, scroll down, and click on the Daily Outlook newsletter. That will join you into the newsletter. It'll add your email to the list, so you'll be notified every single time one of these comes out, and you'll never miss a beat. Along with that, at the bottom in the blog post area, we have our market psychology videos that we talk about every day, as well as the live trade room morning prep levels that we post every morning to get ready for that day. If you don't want to quite become a member yet, you can jump on over and you can actually take a subscription or a trial to the live trade room to get kind of a feel for it and see if it fits you. And as always, if you have any questions, you can send an email to me, jbrink@slingshotfutures.com. Now, looking at the Bund overall, starting there, we had a fairly range-bound day, and that sentence can really be copy-pasted for all of the other markets. Fairly range-bound day. We had a slight gap up. We found ourselves in an area of monthly resistance, 159.94, where we then started turning back around to the downside. Now, off of that area of resistance, we actually did set up a fairly good-looking bearish trend. A lot of the selling pressure kept coming in. We had a good dive lower here, and then we found a double bottom and started correcting back the opposite direction. So when we get that kind of correction, if the sellers can't take it right here on that drive lower, we're probably going to continue back to the upside. All they managed to do was come back to retest this area of interest and ricocheted right back up towards the upside. So with that failure from the sellers to take it back down to the lows, the buyers are now confirmed in control, and we can see that they are continuing. The major objective for buyers is to get back up towards the highs. Now, with the monthly resistance and the fairly large resistance sitting at 159.93 and 94 all in the same place, they might have a little bit of a hard time cracking through the highs, but the major objective for all of the buyers, whether they bought down here or they're buying right now, is going to be back towards those highs to try to finish that objective off. And if we can get that type of scenario, well, we may be looking for more of a range-bound type day going into the afternoon session, going into nighttime, and then early in the morning. Does kind of appear as though we have a slight head and shoulders, but with kind of a twin-headed head and shoulders. Now, a lot of times when you get that, you could sort of combine these two together, right, as one, but it does add a little bit to it, keeping an eye on that fact that it was a double bottom, and we may be looking for a double deviation up off of that area, and that puts us right around where we are right now to find some potential resistance, and we are seeing a lot of wick and profit taking up here. So basically what we're looking for is to be buyers, but maybe not this high in the move. We're right next to the prior high of day, we're right at the peak of the wedge. There's just too much in the way. So what I would rather see, although I do want to be a buyer, is a dip down into 159.71, find buying pressure down here for a possible trap underneath that earlier double bottom, and then rocket the move back up to finish the job. So I want to be a buyer, but not right here. I want a better price. Over on gold, relatively range-bound here as well, but with a slight bullish bias. We opened up over here in the weekend session going into Monday and had a good drive higher. Now, after that drive higher sort of subsided, we found a lot of weakness up here, right? Huge amounts of weakness up here, and the fact that we're running right back into that area again is definitely a clue. The buyers are trying to get back into an area where the sellers took control before. This is an area that we need to see, do the sellers still want it? They took it here, which is pretty obvious. Now do they want to retake it if they are still interested? So this whole area is a big area of interest. And you can see as soon as we started pushing in to that immediate bracket area between 34.7 and 35.5, we're already seeing selling pressure coming in. So the sellers are at least trying to defend that initial attempt down that they had earlier in the morning. Now, we do have a bull wedge forming here, and we also have a higher low on that big pullback. So with that big pullback and a higher low, we are seeing the buyers attempting to attack the highs. But here's the caveat, right? With this big of a pull down into major support at 30.5, the fact that it pulled against that move so aggressively, right? Normally you want to see something like this or something like this. But this is something like this, right? Barely misses that low before turning back around. And with that bare miss of the bottom, that tells us that by the time we get up to the highs, there aren't going to be many buyers left around to keep it going. So chances are we have a lot of buying pressure that is going to turn into selling pressure up here as those buyers take profit. So be careful around this 34.7 up to 35.5, and maybe even potentially find some selling pressure above that 35.5 for a fade. Over on the bonds, relatively back and forth, and we just made it into a major target that we've been looking for, 149.06, finally hit from this morning drive higher. Now we're looking for potential further continuation, but that's not going to be up until around the 16 mark, which is the next major objective. Now, the overall momentum to the upside is bullish, right? Pretty obvious. A little bit grindy to start, but then we had a nice breakout move. So with that big breakout move, that kind of hit the gas pedal to the floor, broke above the channel highs, and when they tried pulling back, one of two things is going to happen with that kind of channel. You have price action working its way up, they break through the highs of it, sometimes, right? The one scenario, they find a peak up here and they correct back to the bottom edge. The other scenario is we have this and they don't really pull back, right? They just go range bound for a little while till they nick the bottom and then take off again. That is a much stronger signal. So the buyers still own this market, and we are seeing the latter event where the market just goes into a range, nicks the channel, and rallies back up to a new high. Chances are, if we can get a pullback of some sort, right? Not just a small little 1 or 2 candle pullback, I mean an actual pullback. I would love to become a buyer once again. Now, in terms of pullback, where would I want to see a pullback? Well, at least down to 148.29, if not a little bit lower to 148.27. Either way, those are the two big areas that I would want to see a pullback to now, given that we are just a little exhausted up here. I want to see a better correction before I go buying into this move anymore, because most of the buy move is already done. So looking to be a buyer, but on a better price there as well. Over on crude oil, range bound with a pretty good start to the day, right? We started off the day a little bit grindy, and then boom, big breakdown to the downside where we found a base from the buyers. Now that base was put in at around 48.84 down to 48.80, and when the market came back to retest it, they found support there again. They tried reversing and then chunked right back down. Now this is where things get interesting, because when they broke down, they came back to that area of confluence, turned down again. Came back to it, turned down. When they broke up, came back to it. They slammed higher, came back to it. This area, this band between 84 and 80 has a huge amount of interest behind it. With buyers, sellers, all sides seem to be fighting over this area. So that is the last thing that I would want to be going against, right? If we're coming off of this area as support, then I want to be looking to buy off of it. And if we can break through it, I want to be using it as resistance. At the moment, we are coming off of it as support several times now after we've already made a new high, which makes me a little nervous to be a buyer anymore. We've seen this several times where it comes into the zone, bounces, and then breaks out, right? And then they use it as resistance. Well, we've already had 2 bounces before and another bounce earlier. Now we are in a situation where it may break out. And if that is the case, I want to use that as a resistance for a move lower. The only way that I would anticipate buying this low between 84 and down to 80 is if we can get some proof, right? I don't want to be the buyer here. I want to be the buyer here, right? So we want to give it a little bit of time before we go jumping into crude, just given the way that it seems to kind of respond to this area. It's usually pretty obvious, and the moves are pretty strong. So if we can get a bounce, we may have another rally to the top edge of the day. But if they fail, we could be looking for a new low as well. So both sides are totally applicable. Just depends on how they want to respond to that 84 to 80 area. On the NASDAQ, seeing some good bullishness, rounding off into the prior high of day and major resistance, 54.26 even. And this is one of those types of situations we were talking about with the channels, where you get that big blow off through the highs and it corrects it all the way down to the lows. Now that we've made it down to the lows, this is the area that we want to keep an eye on, right? Down here is where buyers want to come in. Major support 54.05, 54.04 half in that area before we start looking for correction. And this is a no joke kind of move. The buyers are very obviously in control here. So what we need to do is we need to not buy the high, we want to buy a pullback. That pullback area, a likely area of confluence between both buyers and sellers, seems to be around 54.1125, and that's where I would like a pullback to. We have a nice run higher, a little bit of a weaker run so far. A good correction down would be healthy for this market at this point in time, and that would be right around that 54.1125 area to become a buyer to shove the market back up towards the highs. Now, we do have major resistance at 54.26 even, but we also have the prior high of day, which kind of stopped the market in its tracks as well at 25.25. So maybe going ahead of that wouldn't necessarily be a bad idea. So at the moment, looking to be a buyer, but I want it on a pullback. The earliest I would assume that the market will give you is 54.13.5. I really don't want to be a buyer there. I would prefer it at 11.25, but the market doesn't care what I want. It is going to do whatever it's going to do, and we just have to play along. So at 13.5 is the first area for buyers to potentially jump in, and 11.25 is the next below it. And then finally on the S&P, much more range bound on the S&P than we saw on the NASDAQ, in the sense that we have a push down into a new low that did leave the weekend gap open, and they pushed all the way up, filled the weekend gap, and corrected all the way back down. So with that weekend gap getting filled and out of the way, we now have a bear channel working its way lower. How much emphasis I would put on that is relatively small, just given the overall bias that we've had and the fact that this is pretty obviously range bound. I wouldn't necessarily want to put a huge amount of money on that bear channel holding. What I would rather instead do is find a fade off of this move, right? We are coming off of the lows of a range. We have a nice breakout to the upside. We have yet to hit the top of the range, right? These two top areas. So I'm looking to buy a pullback, and we are right in that area. 23.69.25 looks pretty good for a potential buy to shove the market back up through this channel into the next area of resistance at 73 even. Now we do have 72.75, which is the prior day's low. In this case, that would be Friday's low. So that may be a level that we have to kind of concern ourselves with. But this is an area where we're looking for a breakout, a pullback, and continuation up to potentially even a new high. So that's going to do it for the outlook. Now, looking at the news for tomorrow, once again, just like today for the U.S. session, there's nothing for news tomorrow. Now, for the British pound out of the UK, we have 5:30 Eastern news in the morning. That's the CPI, as well as 6 o'clock Eastern, which is the Bank of England Governor Carney speaking. And then the Canadian dollar, so out of Canada, as we always mockingly say because I can't ever say it right, we also have the core retail sales at 8:30 Eastern tomorrow, but nothing for the U.S. So that may mean that all of the small news announcements that may be coming out could have a larger impact, but we may just have another day of small, slow down kind of range. We got to be very careful when there's no news on the calendar, just as we would if the news calendar was full of news. We have to play it a little bit safer. So that's going to do it for this one. Like we always say, make a plan, trade the plan, follow those rules, and you'll be A-okay. Until tomorrow, have a good one.